Hi, welcome to the channel. If you want to become successful and want to make consistent profit in the market, you need to understand the basics behind it, how the market functions. So I'll be going to talk about a stock market cycle and what is the relationship it has with business cycle. And when we talk about a stock market cycle, there are multiple phases in which the stock market cycle works. I'll be discussing one by one what is accumulation phase and markup phase, distribution phase, and markdown phase series of videos. And this particular video, I'll be discussing more about accumulation phase and then explaining how the accumulation phase is entered and what happens during the accumulation phase and how the accumulation phase ends and starts the new uptrend in more detail, what the real gameplay here, how the large investors accumulate their shares during this accumulation phase. Also, we'll discuss in detail about the volume price action, demand versus supply, effort versus results when we look at the real case study and very closely look at the chart, volume, price, volatility, and various key concepts. So let's get into the session. Like the sessions, please do subscribe, like the video, and also click the bell icon. So that would help me to create this kind of videos more in the future. The business or economic cycle is in endless ups and downs, typically alternating between a recession and economic boom every 4 to 6 years. Cyclicality of business activity seems to coincide with bull and bear markets and trend of stock prices. Bull market tracks expansionary business conditions and bear markets tracks business contractions. When the business cycle is plotted alongside the stock market, somewhat it tracks each other. But on a closer inspection, the stock market cycle leads economic cycle, typically 6 to 9 months or more. If we need to make money, we need to understand the mystery between the real economic cycle and then the stock market cycle. How do we do it? By understanding the classic stock market cycle and its multiple phases, we can understand ongoing market context. So basically, there are four primary phases make up the classic stock market cycle: the accumulation phase, markup phase, distribution phase, and then the markdown phase. What you see in this chart, it's exactly a mimics or refers to the what you see at the left side. This is a stock market cycle plotted close to the economic business cycle. In the chart, we can see the similar actions a stock market cycle is plotted. When we discuss about accumulation phase, the basic five internal phases the accumulation happens, you can see here. First, you have to stop the ongoing trend. You have to stop this ongoing trend and build a cause. Cost building is basically where actual absorption happens to the stock, and a test phase where after completion of absorption, large investors will test the stock's supply. And once the supply is absorbed and no more sellers left, that's when the new trend emerges for a little demand. That's a new trend start phase. After a period of time, when the demand is picking up, then the trend gets stabilized. So to make a downtrend to move to the next uptrend, the accumulation phase is where actually the trend changes in phase wise, as you see here. First, you have to stop the trend where the supply is very high and the demand also has to match to stop the trend. Later, the demand and supply will be in a balance. During the test, the balance get disturbed, and later when new trend starts, the supply is almost nil and the demand is picking up. That's when the new trend starts inside the range. Later, demand takes the control and supply is very less. the trend stabilizes for the new trend. To know more about demand and supply, look at the right corner. There is a link provided for my previous videos. If you like this video, please subscribe, also like, and do press the bell icon. It will help me to create more videos like that in the future. For example, we look at a list of stocks today to know more about and understand how this real economic cycle versus stock market cycle with respect to the price action of a particular stock. To see the stock market cycle in a chart and see the price actions. To know more about price action, look at the top right corner. There is a link provided about my previous videos. The first thing you have to understand when you go to any charting tool, the timeline in which the chart is plotted. So what you see here, it's a daily chart. Each one of these bars are called candles, and at the bottom you see the volume. In a daily chart, you cannot really predict or you cannot judge the stock market or economic cycle. You need higher timelines. To get more and more clarity, you have to go higher timelines and then look at the chart. For example, here, let's look at Apple. I moving from daily to weekly. Now you can see the timeline got changed from daily to weekly, and the duration what you see here is for almost 5 years. And the cycle between up and down, it's happening. If you want to get more clarity on very long time what's happening with the stock, you have to go into a monthly chart where you can see a period of from 2001 to 2025. It's almost 25 years of history where the stock gone up and down. This is a recession happened during 2008 to 2009. The stock went down. This is a marked down phase, and then this is the area in which the accumulation was happening. And you have mark up phase and then the mark down phase. So the same thing is getting repeated again. The mark down phase, accumulation phase, and markup phase, and then the markdown phase. So the nature of ups and downs of economic cycle somewhat reflected here in the stock market cycle as well for this particular Apple stock. Let's look at one more chart. So you can see the markdown, accumulation, markup, again a markdown, accumulation, markup, markdown, accumulation in progress. In the examples we have seen, the stock market cycle always follows the phases. Initially, it starts in the accumulation phase. Once accumulation is nearing to an completion, then the markup phase starts. The markup phase runs for quite some time. Later, the distribution phase occurs. After the distribution phase, the markdown phase happens. Again, the accumulation phase starts for the next cycle. So if we know exactly which market phase, that helps us to when to buy and when to sell. So the idea of learning the classic market cycle is to help us to know when to buy and when to sell. If you are able to find out right buying time by looking at the chart, enter exactly when the stock is at the price very attractive and in a discounted manner, and then say let's take this example here. If we know the market context is currently ending accumulation, and then if we can enter here and buy a stock and hold that stock for 3-4 years, that will give us a price difference from $60 to $300. It's almost like 4 to 5 multiple. We will be able to make a profit booking. This is the biggest advantage of knowing the market context and knowing the various market phases involved in a stock market cycle. In upcoming slides, we will focus mostly on the accumulation phase as the a key where the stock is getting absorbed by big investors. How they do it and how do they run their campaign and more details we can discuss. Let's start look at in detail about accumulation phase. What exactly triggers the accumulation phase? The first activity to start an accumulation phase, you need a stopping action that stops the previous downtrend. The downtrend being started due to high supply and less demand. If you want to stop that downtrend, you need to have an opposite side creating a high level of demand to exceed the supply. This can only created by a very large amount of demand meeting the large amount of supply. Obviously, when we have a very large volume of trade happening, it can be only produced by large investors. You can see here the downtrend is happening over a period of time. At one stage, the high volume which enters in the opposite direction of to stop the downtrend. The key points we have to remember during accumulation phase, you need a large buyers stop the downtrend, and these large buyers come very early in the accumulation phase, and their plan is to observe as much as possible at the lowest price, which they see is the very good opportunity to buy that high quality stock. And also, they would ensure when they do this absorption of high quality stock at the low price, they will run a campaign to make the stock is not much interested to the common retailers by maintaining the price at the very low level. To know more about large investors, smart money, strong hands, look at the top right corner. There is a link provided for my previous videos over a period of a time. This accumulation phase can go not just weeks or months, even in years. It's a very lengthy process. Depends on how much is the supply, or we call it as the float exist in that stock. So the key points here is we need a very high amount of effort from the large buyers to produce the result to stop the ongoing downtrend. And that's the stopping action. After that, the large buyers or the smart money make sure the price is maintained at a very low level for them to buy over a period of time until the supply is absorbed strategically. And to make this to happen, they have to run the campaign for a longer period of time. If you like this video, please subscribe and click the bell icon. Also, add some comments. It will help me to create more videos in the future. And the large buyers executing this accumulation campaign, they have their own strategy to absorb the stocks. They do observation at a very low prices. Observation is the key feature of the accumulation phase. Larger buyers observe shares like a sponge at a good price value with the intention of holding the shares for a very long time. The only scenario that would cause large buyers smart money to sell these observed shares would be much higher prices. They do this with careful planning and execution. Large buyers intended to observe these shares at the lowest average price possible. As this accumulation phase evolves, greater number of smart money will be competing for fewer and fewer available shares for sale. Stock is bought on weakness as the stock price falls from the top of the accumulation range to the bottom. Support at the bottom of the range is the result of large buyers buying activities, and this can be seen in the spike of volume activity. But the retailers becomes over more pessimistic when prices remains low and listless. This is the key strategy, keep the prices at low. The problem is as the accumulation phase develops, this becomes ever harder to do. Large buyers leave their footprints and the charts could not be hidden. You can notice here the line which is drawn top of touching the price whenever it moves up, it's a resistance line. So this is the line in which whenever prices touches, the new supply emerges. It's basically people waiting here book their profit. So that's where the new supplies emerges. At the bottom again, when the prices is very low, it always touches the bottom line called a support line. When the downtrend is nearing to an end, this is where you will be able to draw the resistance line and then the support line. Stopping action will create this a range. Later, the large investors, smart money people use this range to accumulate the share. When every time when the price touches this support, a huge volume comes in. That's the low price. You can see the spikes of volume at support zone always. Every time when the price is at the support line, the huge volume comes. So this is the big deal where the large investors and then the smart money will come in and buy huge amount of shares. This is basically their footprints, which they cannot hide it. Over a period of time, that is not only one a smart money or a one large investors. Here there are many investors are involved to absorb the existing supply. Obviously, whenever the price touches the a lower level where they see the high quality stocks is under discount, they buy in a larger amount. Automatically, when this large buying happens, it recorded as a high volume. It is an indication for a retailer to know that the large investors are accumulating these high quality stocks by looking at these volume spikes. And one other intelligent thing the large investor do, they maintain the price at a very low when they're doing this campaign. It is strategically done by the investors, large investors, while they're doing the campaign. The stock is very boring and it's listless, and no retailer would get an interest to buy that stock because it's not even moving higher prices over a longer period of time. That makes retailers to sell the stock and move out. Low prices usually discourage public interest to buy the stock. What you see here is a trading range formed between the resistance line and then the support line. This trading range is in action during the accumulation phase, starting the year almost mid of 2022, and this range is in effect till in the beginning of year 2025. During this almost 4 years of time frame, the stock at the beginning having a very high level of volatility when the trend is nearing to an end, the markdown phase when nearing to an end, you can see the high volatility and the volumes also very high. And this is when actually the high forces of demand made the high level of supply. So the trend coming to an end and the sideways action started to start the accumulation. But what you would see in the real case of an accumulation over a period of time within the range, the demand and supply will be in balance. That's what it decides the accumulation phase, the time duration it is required to absorb the supply. So when the demand and supply in balance, the stock will be in a range. The price action will be in a range. But after over a period of time, when the balance moves between demand versus supply towards when the supply is slowly getting decreased and then the demand also absorbing that supply, you can see the volume comes down. Also the volatility, what you see the price action at the beginning of the accumulation, first half of the accumulation, and you compare it with the second half of the accumulation, the volatility of the price is very less compared to the beginning where you see the red candle is so high in terms of their price action. But later when it is concluding or close to completion of accumulation, the price volatility and volume dried up. What does it actually means? The balance between demand and supply over a period of time, it's slowly the big investors, smart money, has been observed outstanding float from the market. To know more about float, look at the top right corner. There is a link provided. When prices touches at this particular area, it's basically the very few sellers left to sell the stock, and most of the stocks are absorbed by the big investors. So the key characteristics when it comes to nearing end of the accumulation or the cost which has been started building from year 2022 until the year 2024 beginning, this is we call it as the cost. Cost is later point creates the effect to go the price up. Almost a 5 years of a long trading activity will come to an end. The final act of this accumulation is to make a minor low below the support line and then a very low volume and a very less price volatility. It's when we can conclude the supply is completely absorbed by a very long process of accumulating the share over a period of time. In the process of accumulation is sown the seeds of a change. Accumulation is a cause that produces a subsequent effect. Based on the how long the cause has been built, the effect will be proportionately higher. Effect, I mean, it's the price that when the uptrend starts, how long the price can go. A moment arrives when there is no more stocks to observe. The large investors is filled up with the stock and the uninitiated retailers and the small investors has no more stocks to sell. In that moment is the tipping point where there is no reason for prices to remain listless and boring. All of the shares of the stocks are in strong hands. I mean, strong hands here is the large investors. Only much higher prices will induce this large investors' strong hands interest to supply shares to the market to book the profit. In effect, there is a shortage of stocks to buy till that time. When a shortage of stock is met with a slight bump up in demand, prices can move violently. So let us look at more on the next video. What's the kind of different accumulation types? Is this so long? What we've seen here? It's a very big accumulation that I have taken it for a initial study. There are different accumulation types which happens in a shorter period of time. We will look at that in the next video, along with how do we know accumulation is nearing to an end. That's a very important thing to understand to start the position or the time to enter into the stock to start riding the upcoming uptrend. How do we know how to enter at what time, and how do we can ensure that new uptrend is started after over a period of a long time? To summarize today's discussion, we have just started to look at how the market down phase ends by a very huge volume coming in the opposite direction, and then the markdown phase ends with forming a trading range where the accumulation phase was started. During the accumulation phase, how the large investors slowly accumulate their position at a very low price levels. You will see in next video in more detail. If you like this video, please subscribe and also leave your feedback so that it will help me to create more videos in the future. To know more about demand and supply, look at the right corner. There is a link provided for my previous videos. To know more about price action, look at the top right corner. There is a link provided about my previous videos. To know more about large investors, smart money, strong hands, look at the top right corner. There is a link provided for my previous videos.